Christmas is back on at Apollo, so I think you will see for us small additions to our capability through acquisitions, but I will be surprised if something transformational happens. We have so much to do in just our base business that it's some new toys now.
That was Mark Rowan, the CEO of Apollo Global Management, and reportedly one of Trump's top contenders for Treasury Secretary, speaking last week at Yahoo Finance's Invest conference about the appetite for acquisitions under the incoming Trump administration. We do want to note that Apollo is the parent company of Yahoo, but the promise here of tax cuts and deregulation under Trump presidency, it could potentially open the door for more deal-making activity in the years ahead. Let's talk about that and more. We want to bring in Scott Sperling. He's a co-CEO of THL Partners. Scott, it's great to see you here, and thanks so much for making the time to join us here at Yahoo Finance. I'm curious, with the incoming Trump administration, how is that factoring into your strategy looking ahead to 2025?
I think one of the things that we're expecting with the new administration is a significant bump in the potential for growth in the overall economy and a reduction in the cost of doing business through a number of the things that you just mentioned. So I think probably most powerfully, it has been a very onerous regulatory regime over the last 4 years. It's not just the antitrust, although that has been an area where the administration has created all sorts of new theories that the courts have almost always overturned, but it raises the bar significantly in terms of the cost of M&A. But there are many, many areas where just the overall cost of doing business in the country has risen significantly because of the regulatory environment. The various threats up from a tax perspective have also created uncertainty. Now, all of this has been exacerbated by recent moves to try to take some of our leading technology champions and put them under significant pressure, again, from an antitrust perspective, but also in other regulatory areas, all putting a little bit of a pall over the area that the markets find to be most interesting from a growth perspective, which would be some of these large technology plays that require enormous tens of billions, hundreds of billions, trillions of dollars investment in cutting edge new technologies that will make everything work better, will reduce the cost of almost everything to consumers, and yet require that enormous investment, generative AI being the most prominent example of that. So I think for all of those reasons, the opportunity set for all business, I think, is probably greater with the new administration, given the issues that we've seen in the last 4 years. I think for private equity specifically, we will benefit as everyone else will in the business world from this change. And I think the flow through, again, to being able to provide anti-inflationary forces to deal with some of the incredible inflationary pressures that we've seen of the last 3 years in particular will be very welcome for consumers.